Hi everyone. No major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fear and Greed Index is at a 39. Previous close was a 39, so again, continuing to hover flat for these last couple of days. That's 3 days in a row now we've been in the 39 range. We did see a slight tick up on momentum as markets went higher, still extreme greed there, and then still extreme fear on strength and breadth. Really no change across the board. Put call ratio, still extreme greed hovering around that 0.7 area, and we did see the VIX turn back down here, back into neutral territory, and bonds are still hovering in extreme fear on safe haven as well as junk bond demand. Moving over to seasonality, we did get a slight step up, so it looks like we might not be seeing that double dip here into the 26th. We might be following the regular year, which would be a slow grind higher into the end of the month. We'll see how that continues to play out. The step up today was pretty aggressive, so continue to play that to the upside based on what I'm seeing, and understand that seasonality does support that, but we're kind of torn here between election and regular years. Moving over to the economic calendar, you can see consumer confidence came in at 100.4, better than expected, but the previous number was revised down, so that's not super great. Mixed numbers on consumer confidence, but still decent. And then looking at Wednesday, really just the 5-year note auction, new home sales, want to see that go up a little bit. And then month over month numbers, previous number was quite negative. Again, want to see that housing market strengthen. I also forgot to mention for the Tuesday calendar, 4.7 on the 2-year note auction, a step down of over 0.2, so that's what you wanted to see on that. And then looking at Thursday, you have core durable goods, headline durable goods, GDP, all of that coming out at 8:30. That's going to be the big data point here for the week. And then you have 7-year note auction, as well as the stress test here at the end of the day. Moving over to max pain, 542 is the max pain. We did step up a little bit here to 544.69. We set a close between 540 and 544 makes sense. Could see a slight rally here. I don't think we're going to finish above 548 for the end of the week. So that really only gives you slightly less than 1% higher. Put call ratio still very high at 4.69. Total options also quite high for an off week at 2.2 million. So lots of options in the market. I feel like we're kind of stalled in this zone between 540 and 548. Moving over to the charts, starting off with the S&Ps, you can see that bottom that we formed pretty much at the low of day from yesterday, right at that closing day. And then we bounced from that level, ended up positive on the day, 0.39, back above the trend line, but we're finding resistance at that 55 EMA, which is 544.88. So again, mixed price action. 544 is my level, but we're kind of chopping on top of that. Not a very useful level here for today's price action. If you're above it, should be bullish. If you're below it, should be bearish. But like I said, chopped on top of that level for a while, so probably would have been in and out of positions. Still held the trend line on the daily chart. Could see a continuation here. That upper trend is all the way up around 552. I don't think we're going to go that high, but remember, price action is always king. Momentum continued to step to bearish. RSI still below the SMA, but did step a little bit higher. So we'll see how that plays. Mixed signals. Right now, I would say slightly bullish, just based on what we saw on the close. Also worth mentioning, we did not see a ton of volume relative to what we saw over the past 3 days at the end of the session. Moving over to the Tasty charts, again, you can see that 8 EMA that ended up as a zone of support. 543.40, that's your support level. Upper ATR band is that 550.25 level. We'll see if we can get back up there. That's pretty much the high of day from the 20th. We'll see how that plays. ATR stop still all the way down there at 534. That's been flat for the past 5 days. Momentum still fading. And looking at that 4-hour chart, you can see we're coming off of that 55 EMA on the Tasty charts on the 4-hour, starting to push back towards that upper ATR that's at 549.47. So again, mixed markets. Daily chart is bullish, 4-hour chart is bearish, and then that lower ATR band is 539.09. Didn't quite get there as the 55 EMA held us up, and then you can see momentum on the volume weighted MACD stepping to bullish a little bit. Still below the midline, but looks okay on that short-term momentum. Moving over to the NASDAQ, similar thesis, but we came off of that 200 here on the hourly chart. That held support at the close yesterday, tested that pre-market, and then rallied pretty much straight up throughout the session, except for that one down candle at 11 o'clock. Pretty solid run. We did get above the 55 EMA, so it looks a little bit more bullish than the S&Ps. Came off that trend line, broke my level at 477.69. Again, chopped on that level 3 times, which is a little frustrating, but overall it ended up bullish, and I did make money on the day, so that was good. Continuation up to the trend line would put you up to 486.30. I don't know necessarily we're going to get all the way there. Momentum on the daily chart did not move, continued to step down actually. And then looking at the RSI, slight step higher, but still well below the SMA, which is starting to flatten out. and in overbought conditions. So we'll see how it plays. This could be a topping formation. If it establishes a lower high here, that's going to be super bearish and definitely something to watch out for. But in the short term, looks bullish going into tomorrow's session. Moving over to the Tasty charts, similar thesis, except we were well below the 8 EMA on the NASDAQ. We did get back above it here. That's at 477.50, basically right on top of my level on the previous chart. Momentum continues to roll to bearish. Upper ATR band is at 484.33. We'll see if we can get there. That's about another 1% higher from here. Certainly possible. I do think we'll find resistance there. You can see last time we overthrew it, we did pull back. If we touch that again, could absolutely see a pullback. Still very much in an uptrend, and again, daily chart is still in bullish conditions. But looking at that 4-hour chart, ATR is sitting at 481.83. Certainly seems like we could overthrow that a little bit. We're back above all the EMAs and SMAs on the 4-hour chart. Still below the midline there, which is at 480.44. We did come off that lowest ATR band, which I did expect to find a bounce from there, and sure enough we did. And momentum starting to swing back to bullish here over the last couple of candles. So mixed signals, but slightly bullish going into tomorrow, just like the SPY. Moving over to the Russell and the Dow. The Russell was negative 0.33. Did get back below that trend line, which is not great, and it's falling a little bit after hours. I still like it here, and if you look at it on the 4-hour chart, we're still holding that base from here on Friday, as well as that Thursday, held that level, rallied up to the 200. Did pull back slightly here, but I think we can gain that momentum, get back above 201.88. You can see we did it briefly yesterday. I think we can do it here. And looking at the daily chart again, this structure still looks bullish to me. Higher low setup. I do think this is going to push one more time. I think we're just rejecting from that 21 EMA. As long as that 144 holds at 199.42, should be good. Momentum still swinging to bullish. RSI pulled back a little bit below the SMA, which is not great, but I still think this is rounding towards the bull side. And then looking at the Dow, big down candle, 0.75, momentum on the daily chart swinging back to bearish. That's not great. Broke the level, 392.44, so that should have been your stop out. If you're looking to trade that 9 EMA at 389.68, that could be a zone to enter from. The low of day just missed it at 389.82. Could touch that level and then bounce. The structure still looks okay. You have a high, higher high, low, higher low. So could be continuing to trend higher. This could just be another slight pullback in that move. But that candle does not look super great with the big engulf. Moving over to stocks that moved here today, we got Carnival and Carvana. Carnival jumping 8.7%. Massive move there. Big volume, massive jump. 1806 is my next level. You can see that here from this kind of dip on this previous rally from December. Kind of the neckline on this topping formation. Seems likely that we'd get there. I'm honestly surprised you didn't touch it on this move. And then above that, you have the highs from this previous at 19.3. But again, that volume was massive. You would expect that to continue to move. Over 100 million shares traded. Huge volume even for Carnival. And it's bounced from that 14.2 level. That's been an important level for a while. You can see that level being important all the way back here in 2000 on this dip low from COVID. Broke back through it in June. Pretty solid moves through in 2023, but then we tested it here, held that level, higher low, rallied up, looks good here going into that 20 area. And then Carvana basically did what we thought it was going to do. Rallied off of this trend line, really solid 3 days in a row. The trend resistance is up at 136.50. Might see a slight pull back to the level, but this looks very strong on Carvana, 7.6% to the upside. It did hit overbought conditions, but I think there's probably more upside in it. Moving over to the Mag 7, here you got a big jump at 1.88%, right back to the level, 265.08. Technically closed above it at 265.14, up a little bit more after hours, momentum resuming, RSI back to bullish. If this pushes here tomorrow, we start to see a push towards that trend line up around 286. That could be an indicator of a massive run coming. I would expect that to be the topping pattern that we would see for the NASDAQ. That would get us into super overbought conditions in my opinion, but that's important. We closed on the high, momentum and RSI say bullish, so should be bullish for the NASDAQ going into that trend line, potentially over the next couple of weeks. Moving over to Apple and Microsoft. Apple testing that 211.55 level, ended up as a doji, we gapped to it. Still positive, 0.45 on the day, momentum bearish, RSI bearish, so stuck between those two levels. We'll see how that continues to play. I would argue bearish, a couple of wicks to the upside, momentum bearish, so definitely a little bit concerning, but obviously the medium-term trend here is still quite bullish. And then looking at Microsoft, 0.73 to the upside, momentum continuing to fade, RSI still overbought, trend resistance up around 458.11. I do think we're probably headed there. This is also a new all-time high close for Microsoft, so that's another bullish bullish indicator that this can continue to trend into that zone. Moving over to NVIDIA and Tesla. Tesla again having a strong day. This consolidation continues to hold, closed pretty close to the high at 187.35. Again, 188.50 is the level. Want to see it break that and hold and push. Once it does, I think it's going to be a rocket ship. This consolidation has taken a long time. I think it's pretty safe to say it's probably not going lower from this consolidation. Everything to me says that this is swinging to the bull side. And like I said, that's a strong finish. And then looking at NVIDIA, we had 3 down days. We said we'd probably get a pullback. Back to the upside. Sure enough, we did. 6.76% to the upside. Back above 125.17. Strong push there. Up even more after hours. The trend line is sitting there at 128.92. If that breaks, the next trend line is up around 135.50 or so. Momentum still says bearish, but RSI is probably pulling back to the SMA. And there's a lot of room in here, so this could rally pretty substantially and then expect it to reject from that SMA. Doesn't mean that we can't make a new all-time high during that time frame, but it would show divergence on the RSI. So both of these look pretty bullish going into tomorrow's session. Moving over to Meta and Amazon. Meta had a huge day, 2.34% coming off of that trend line. Continues to hold, tested it the last 3 days. Strong push, strong close, headed back to 520 in my opinion. Momentum and RSI both bullish. Still not a ton of volume, but this looks very good still. And I do think it has another 2% higher before we find resistance. And then looking at Amazon, still cannot get above 188.61. Tested it again here today and it was positive 0.41. So the structure is still intact. The trade is still intact, but it does seem to be losing momentum, which is concerning. Meta looks like the better trade in my opinion. Moving over to Staples. Closed below 77.50, still holding this bundle of EMAs and SMAs. Momentum bearish, RSI bearish. Might just see another dip to a slightly higher low. Still in this consolidation, nothing crazy. But the close below the level is fairly interesting. We haven't done that for a couple of days. And then looking at discretionaries, pulled right back to my level. 180.10, and then after hours you can see it's at 180.11, so it's right on top of it, almost to the penny. Momentum bearish, RSI rolling down. Neither of these looks super great going into tomorrow's session, but as long as that 180.10 level holds, and if we can get back above 77.50, both of these could be bull trades, but if those conditions are not met, then these are bearish trades. Moving over to communications and technology here, both of these were the most positive sectors, 1.12 and 1.83. Technology had those 3 bear days in a row. We expected the bounce. Sure enough, we got it back above the trend. Momentum and RSI on both of these still look okay. Technology actually looks weaker. Communications back to bullish, RSI back to bullish. You can see that big break there. And this is getting very close to that all-time high close at 86.24. You can see that wick all the way back here in September of 21. That was the high for communications. And now we are back into that region once again, getting very close. If we overthrow it, could be new all-time highs, could be a breakout for communication sector, and that is definitely something to watch here over the next couple trading days. Moving over to oil and copper, you can see oil pulled back a little bit, still finding resistance at the level, close below it, close below the trend, momentum fading. Looks like this is going to pull back at least a little bit. Could just be back to this consolidation around $77 or $78 a barrel, but definitely something to watch. Looks bad. And then you got copper breaking down, broke below the level, closed below it, momentum bearish, RSI bearish. Both of these as economic indicators say that the economy is contracting. Oil getting ready to roll down. Copper continues this downtrend, and that is definitely concerning. Moving over to the crypto miners, we got RIOT at negative 0.11, basically flat on the day, still holding above the level. If it's going to do it, it really needs to bounce from here. Otherwise, this is starting to look much more bearish than it has over the past couple of days. And then looking at Marathon, got back above that 1878 level, but still finding resistance at this downtrend line. If I had to pick one, I would probably say Marathon, but honestly, neither of these look very good. Moving over to 20 and 50-day breadth, both of these saw a pretty significant step down actually. Breadth pulling back to that 51.75 level, important level, held that. Momentum starting to roll to bearish there a little bit, definitely concerning. And then 50-day breadth, big engulf candle, closed well below the 52.81 level, down at 49.90. Still have some EMAs in there as potential support, and we're still well above the SMA on these charts, so we'll see how that plays. This is definitely a concerning candle. That's also a lower high setup on both of these if this continues lower. So something to watch. Could still hold a higher low, but that's a concerning candle for breadth. Moving over to the dollar on the hourly and the daily, you can see the dollar caught a bid at the 200. That was trading around 105.4 when we touched it, and then we rallied up. Ended up positive on the day, but didn't engulf the previous candle, which was quite bearish. So we're still in this zone at 105.5. Might still hold in there. Momentum on the RSI still says that this is bullish and we should be trending higher, but it's kind of taken a little while to do it. Short stints, pretty decent pullbacks. Short stint, pretty decent pullbacks. So we'll see how it plays. I'm used to the dollar kind of moving more like this, where you get really strong candles, moves very quickly to resistance. It's not doing that right now, so that's why we're seeing these kind of choppier markets. If this breaks higher and starts to push to 106.8, that's going to be quite bearish, and it really hasn't done it yet. Moving over to bonds, both of these continued to rally here today. We said they looked bullish yesterday, and sure enough, they were again here today. 0.1 on JNK, momentum bullish, RSI bullish, still headed towards that 94.82 level. Think we're going to get there. We're above all the MAs and SMAs. Similarly here on TLT, positive on the day, 0.17, headed towards that trend line around 94.91. We'll see if it can make it there. If it overthrows that, 96.50 is the next level, so looks okay. Momentum is fading a little bit, but we did see strong volume on yesterday's candle, so I would expect this to continue higher. Moving over to volatility, you can see MOVE Index continuing to trend higher, which is interesting. Bond market volatility trending higher a little bit, not telling us a ton about markets, but something to pay attention to. And then looking at the VIX here, pulled back to this 21 EMA around 12.86, still holding the level at 12.75, still holding a higher low potentially, but momentum starting to fade there. This might just be a little bit of a shorter term wave and a slight pullback. So see how that plays out. So pretty bearish on the VIX, could give us a little bit more upside in markets tomorrow. Moving over to my accounts, I did make some money, up around $500. My IRA was basically flat. The covered call made up for almost all of that down move, just a couple of dollars lower there, and then $500 plus on my main account, so that was good. Should have made a little bit more, but I was concerned that we could see just a little bit more down move off of that move yesterday, so I played a little bit of defense going into the close, so I wasn't able to make as much money to the upside. Still made money, but just a little bit less than I would have normally. And then looking at my positions, still positive going into tomorrow. I have the 201 call for 49 cents, and then I have my 200 shares. I did roll out that covered call to 475 for 2 days from now for a $5 credit. So the max profit on that is up around 480. And then I have my puts for tomorrow, 477 and 483. You can see that has a bullish lean and both of those are in profit right now. So both of those look good and overall a slight bullish lean. Let me know down in the comment section what you think of the charts. Are we going to get a continuation for tomorrow and we're going to get new higher highs? Or is this the topping formation and we're going to see a double top or a lower high potentially setting up for a bigger down move? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. All of this is for entertainment purposes. Good luck in your trading and have a great day.